Hi, this is Steve Hammer from HFT Alert, and in this video we'll show you how to set up your Accumulator software. You've already downloaded it to your desktop and followed the instructions on the page, but before you turn it on, let's review a few things. First of all, what you'll want to do is rename your folder Accumulator. So simply right-click on it, go to drop down to Rename, and type in Accumulator. Next, open up your folder and sort by file type so that the executable is at the top. And there is our executable, HCMI_tx.exe. That is the Accumulator executable. What you'll want to do is make a shortcut for this and either drop it to your desktop, or what's really easier is to pin it to your Start menu. And to do that, you simply right-click on it and drop down to where it says Pin to Start menu. And if you click on that, it'll put it on your Start menu button so that you can always turn it on from there, which is always the easiest way to do it. Another thing you need to know are the data slaves. These are the data slaves that connect into the data feed and run your program. Each of them has these two little icons, and you'll see that when you start the program, you'll see each of these slaves come on. Very importantly is the time sales ASCII datasets folder. If we double click on that folder, this is where all the historical data and the data that the accumulator accumulates during the day is stored. This is the heart of your program. Each symbol has three files: full history, running history, and the append date. So you can see in this particular folder we have two symbols, Apple and SPY. Running history file is the file where the actual data is stored. An append date file is the file that tells the program what date it is. When you download data from the data archive, which you'll get an email about instructions on how to do that, you'll simply download that data to your desktop. You'll open up that file and copy those data files into the time sales ASCII datasets folder. But it's very simple. You simply copy the data and drop it into this folder. So let's close down this folder and start up an Accumulator. Okay, we've opened up an Accumulator from our Start menu icon that we pinned to the Start menu. When you start the window, it starts in full screen mode. If you double click on the blue taskbar up here, it'll shrink down to the proper size. We have it in full screen mode for this example, but you'll want to run it in smaller window mode by simply double clicking here. So to log on, there's two ways of doing it. We can either click the log on button up here, or we can hit the F1 function key on our keyboard. To do it for now, we'll click on the log on button. And as soon as you do that, you'll see that a data slave, the first data slave, will open. And when it gets connected, it'll shrink down, and then a second window will open. And when it gets fully connected, it'll disappear. And if you look down in your taskbar where your Windows clock is, you'll see both icons are down there. And you'll see that it says online right here. Now we're connected to the data stream. To bring in a symbol, what we'll do is we'll bring in SPY. There's two ways to do it. You can either hit the F3 function key on your keyboard or click the symbol button. So we'll click the symbol button. We'll type in SPY, and then we'll hit our Enter key. And depending on the speed of your computer, it could take anywhere from a few moments to several minutes to load the data, depending on how big the data file is. In this case, SPY is a very large data file, and it could take several moments for the data to come in. Simply be patient and wait. So here we see that everything is loaded in. We've got our price bars, which are the blue bars, and we have our accumulator, which are this purple or magenta line and the light colored cyan line. On the left, we have the volume at price bars, and we can come up here to chart options and we can turn those off. The volume bars down here are for each accumulator, and we can make those larger or smaller. So if you happen to turn on a screen and the bars look like that, you simply come to the volume scaler and click it down so that it doesn't cover up the bars. So we select each accumulator by coming up here to the accumulator buttons, and we can sort through each of them like this. So the buy sell, market pressure, liquidity, raw tick, they're all selected by clicking those buttons. We can alternately come up to the accumulator button up here and do the same thing that way, but of course it's much easier just to use the buttons. Notice over here in this section we have our minute scalers. Now when the program is running, you must run an accumulator in the 1 minute mode. If you don't, it won't see the tape and it won't compute the tape. All the additional minutes are utilized by opening up a second accumulator window, setting it to that additional minute section, and then turning that one on at that. So if you want to run a 1 minute and a 15 minute or a 1 minute and a 5 minute, you always keep that 1 minute running. We would simply open up another window and select the 5 minute, for example, log in, and then load the symbol. And that way we would have two accumulator windows running, one at 1 minute and one at 5 minute. But for the purpose of this video, we're just going to show you 1 minute. Also, you can only have one 1 minute window running for each symbol. Do not open two SPY windows at 1 minute and run one on the buy sell and one on the market pressure. If you want to see the different accumulators, you use the accumulator buttons to switch to them, and that way you can see each of them running during the day. So let's run through what each of the accumulators are. There are three transactional accumulators that look actual transactions that occur. They each look at different things. The buy sell looks for certain kinds of transactions that I believe to be buy sell. Now, how do I know that? Well, when I was a portfolio manager back in the 80s and 90s, and when I started writing the accumulator in the late 1990s, I would routinely make large purchases for our portfolios. These would be block transactions or transactions that were in excess of 10 to 20,000 shares. And I knew what prints on the tape were mine, and I knew what I was doing. So I programmed the buy sell to identify my trades. So if I could identify my trades, and I knew whether they were buys or sells, then one would expect that any other trade that occurred like that would also be a buy and sell. So this particular accumulator looks for large block transactions, and if we increase our volume scaler a little bit, we can see what some of these are. If we use our mouse button and right click, we can see that, and we put it over it, we can see up in the data bar up in the top that this particular trade occurred on 8/1 at 1337. This particular bar had a high of 192.71, a low of 192.53, a close of 192.64. We can see the level of the accumulator there at about 900,000 shares. We can see the difference for that bar was up 125,680 shares. We can see for that particular 1 minute bar that there was 136,816 up volume and 11,136 down volume. Flip ups, flip downs, those are something that we'll talk about at another time. And the horizontal bar, we can find the close on that bar. And if we move our cursor up, we can see the level there was 192.56. So under the buy sell and with any of the transactional accumulators, we can look to see in the feed how much of that trade were generated by algos or dark pools. So let's click algos only, and we can see now that the accumulator line looks a lot different. Now this shows only algo trades, and if we go over this, we can see that those numbers have changed somewhat. The up volume and the down volume is now different. We can see under all on that trade, we can see that it was 136. If we go to algos only, we can see that was 136 as well. So we can see that all of that volume was algo volume there. If we go to dark pools, we can see that's completely disappeared. So we can see that that burst caused by algorithmic trading systems. So that's the buy sell. Now let's switch down to liquidity. The way to think about liquidity is, if they were out taking offers, we would see the accumulator rise. If they were out slamming the bids, we would see the accumulator fall. And in this case, what we see is selling as the price here in the early part of the day was rising. We can see that the accumulator was falling and falling and falling. So all during these times when price was rising, they were still selling into that. And we can see here that as price was moving down into this level, from here down into here, we can see that the accumulator was rising. So they were buying. So here they were obviously shorting into this move. And then as the price came down to a certain level, equal to the opening lows of the day, they started buying, which means that they were covering their shorts. And there could be new longs coming in here as well. So here you see a low right in through here. Here you see a low in the accumulator. Here you see a lower low in price. Here you see a higher low in the accumulator. And then these levels hold. You can see that they buy more strongly here. And then they start taking profits in this level again here. So let's turn off these trend lines. Oh, by the way, to draw a trend line, you simply hold the right mouse button down. Then you hold the left mouse button down and drag the line to the right. Then you release the left mouse button, and then you release the right mouse button. And that makes your line. And that line will hold in through the entire day. We come up here to trend lines, and we can clear them all. So let's run through the algos and the dark pools on liquidity and see what they were doing. So let's draw in a line to represent what the full feed looks like. And it generally goes like this. Okay. Now let's switch here to algos only. And now these are only algo trades, and we can see that relative to the overall line, we get some extension here and some extension down here. And you can see that relative to the overall volume line, the average volume level in algo trades was above the full feed. You can see how full feed is down there. Algo volume is up here. Now let's switch over to, let's draw in a set of lines for the algos. Oops. Let's say they come down to about here, and then they're up about here, and then they're up about there. And now let's switch to dark pools. You can see the dark pools quite a bit different. They were selling pretty much all the time through here, a little bit of bump up through here, and then they sold the balance of the day. So you can see that relative to the overall volume, the overall volume for the day of algorithmic trading was much larger, but that dark pools were sellers pretty much the entire day. So let's get rid of all of our lines. We'll go back to all. Now the third transactional accumulator is the raw tick. And there's the raw tick. Now the raw tick is simply uptick volume minus downtick volume. For stocks like SPY that have tens of thousands or hundreds of thousands of ticks during the day or more, in fact it would be millions of ticks. I've seen 42,000 ticks in a single second. The raw tick is not too predictable. Simply too many ticks during the day. On lightly traded stocks, stocks with low volume, or very thinly traded stocks, the raw tick can be very useful. But on a stock like SPY, it's not as much. But here, if we see that overall they were selling in the first part of the day and into this low, you can see it rising. And this is one of the most powerful accumulator patterns to watch for, is when the accumulator rises as price falls. So here we can see that from this point here, we can see that stock prices are generally declining here, and the accumulator is rising into this low. That's a very powerful pattern. It's called positive divergence, and when it occurs into a low, that's really what you need to watch for. And conversely, when it falls into a rise, that also is very important. Here you see the negative divergence here, price rising here, and price falling here. And we saw that on the liquidity, which is the main directional accumulator that we want to look for SPY, and also on the raw tick here. So let's go through and look to see what the algos were doing. See, it looks like that. It doesn't show any positive divergence into the low. And on the dark pools, the raw tick on the dark pools show them that we do see some positive divergence there. But again, we really don't want to watch raw tick for SPY because of simply the amount of ticks. But from time to time, and certainly as you're watching it over a range of minutes, it can be useful. And again, depending on how you trade and what things that you want to look for, it may be of value to you. So let's switch it back here to all, and we'll go up to trend lines, and we'll clear all of our trend lines. Now, let's look at market pressure. And we can see that our volume bars here are too large, so we'll click our volume scaler. And a note here, each of the volumes are going to be different for each accumulator, because that's what it's looking at, is the volume for that particular accumulator. Market pressure looks at the visible supply of bids and offers. In a strong market, you would expect to see bids come in under the current price level, so that as price moves back down within its range, institutions will want to buy into lower prices. A weak market has more offers than bids, and as price moves up, you'll see greater offers and greater sizes come in, and that's what the market pressure accumulator looks for, the visible supply of bids and offers. And for SPY, we use it to give us a read on what the liquidity accumulator is telling us. For every symbol that you look at, you're going to find that one accumulator will be predictive of future price direction. Each of the accumulators are accurate in what they're measuring, but not all accumulators are predictive of future price direction. For SPY, the liquidity is our main directional indicator that we watch, and the market pressure gives us a bias to how strong or how weak that particular trend that the liquidity accumulator is identifying is. So in this case, for this day that we're looking at, which happens to be August 1st, we can see that the market opens, it gaps down, and our market pressure is rising. The price comes up, and the market pressure starts turning down here at about 942 and starts moving lower. You're going to want to watch the raw accumulator, which is the magenta line. The blue line is our smooth line, and it's simply smoothing the raw accumulator, and in another video we'll show you how to deal with that. But for now, just keep all the settings the way they are. We can go up to parameters and change all of our smoothing numbers here, but we'll go into that later. So what we see here in the opening gap down is the market pressure is rising. Our liquidity accumulator, we see that they're selling into that move. And if we look to see our market pressure turns down, and with the selling on the liquidity, we know that this high is not going to hold, that we have negative divergence, and that move up is going to fail. So we see that our market pressure starts moving down. We get these small little counter trend moves, but the market pressure stays negative. We see that our accumulator on our liquidity is showing positive divergence into this low, and we expect that this low would then hold. If we come to our numbers and increase our numbers, we can go back and look to see a prior level, and we see that there's no prior level there, so we'll go back, and if we use 405 data points, we'll see the entire day. So we see this low that comes in, but as the market moves back up into the range, we can see that our market pressure was negative the entire time. It flattens out here. But had we seen this market pressure turn up into this low at the same time that the liquidity did, then we would have expected to not only come back up to this high, but probably take it out as well. Now when we look at market pressure, notice here that if we switch to algos or dark pools, it doesn't matter what we see. The volume will change a little bit, but the market pressure, we always want to watch the entire market, so it's programmed simply to look at the entire feed. So that's the 4 basic accumulators with the 11 different combinations. Let's look at another stock. Let's bring in Apple, which you have data for. So we'll come up here to Symbol, or hit F3 on our keyboard. We'll type in Apple. We'll hit Return. One thing that you can do when you bring in a symbol, you get it the way you want it. Say you don't want to look at volume on price. And say we want to watch the whole day 405 bars, which we get by putting into our num bars. By the way, on the num bars, we have these individual selectors. Or we can type in a number up to 2500. And there's 2500 1-minute periods. You can't see more than 2500. So we've got it to 405 bars. We've got to set it to market pressure. So if we want that window to always open up that way, we simply come up here to Chart Options and click Save Current for Symbol. If we do Save Current as default, then every window will open up that way, and we don't want to do that. So if we click Save Current for Symbol, the next time we open up Apple, it'll come in this way. If you wanted to set it for dark pools, which I don't recommend, you should always be watching your accumulator under All. Say you're watching the liquidity, you always want to look at All and only switch between algos and dark pools during the day to see what things are happening during the day. So for Apple, the market pressure is our main directional accumulator. And here you can see that during the day we get this range trading thing going on, and the market pressure is pretty flat. And then beginning here at about 1323, we see the market pressure take off. Price really hasn't done anything. You see it's still trading within its range. And here we get a big expansion bar up here. We get a little extension up on the accumulator, and then the price takes off. So when you see the accumulator rise like this, especially as you're moving up into a resistance level, so here's one resistance level, here's our support level down in through here. So you can see as it comes up into this resistance level, when you see the market pressure move up like that, it's going to take out that level. And if we switch over to liquidity, we can see that they were selling all through that level. We switch to algos. You can see that the algos were selling through there. If we switch over to dark pools, we can see they were selling there. So we wouldn't have really expected to see price take out these levels because of the selling going through there. But it did. And the market pressure, which is our main directional accumulator. So what this told us, by the liquidity moving down while market pressure was moving up, was that this was a weak move. It wasn't being supported by both accumulators. And had you bought this low, when you saw the market pressure start to move up, you probably wouldn't have had a target much higher than this level right here. And you can see that at that price, when it got to that level, it moved back down into that range. And as it, even though the market pressure was rising, it took that level out, even though the liquidity showed selling. So that's the basic tutorial on starting your program and running through each of the 4 different accumulators.